We're coming off one of the best quarters in over 7 years. Markets up 12% this year, again plus 20% since the Christmas Eve massacre. Well, what gives? As we predicted on this blog each and every week, March will be a very volatile month. There's less corporate news, and there's more news coming from Washington and more news coming from the Fed. Well, the Fed last week said this: they're done raising interest rates for the next year. Again, positive for you, more money in your pocket. The Mueller report came out last week. Is the president vindicated? Well, as of this taping, the answer is yes. So he's in a better bargaining position for trade. Again, positives going forward. And last but not least, what we have today is what's called the window dressing. All the winners continue to be bought and all the losers continue to be sold. Mutual fund companies need to show their cards. What did we own over the past quarter? So again, everybody's going to own Apple and Nvidia. You won't see anybody owning Boeing at this point. Now here's what to pay attention to next week. Now, as we mentioned, the president is in a much better position to bargain where it comes to trade. They know that they have to deal with this president for at least 2, if not the next 6 years, versus the next 2 to 3 weeks. So better bargaining position, better trade news next week. Corporate earnings come out. There'll still be some confessions, again, companies that haven't hit their earnings, but April is typically a month where people like to say, hey, we've done a great job, and this is what we're going to do going forward. So what we're going to pay attention to is their projections. Do they project growth, slow growth, or no growth at all? If that's the case, it's time to reallocate. Now, IPOs, they're all over the news. You're going to hear about Lyft, Uber, Pinterest. I know Mrs. McDonough is a big fan of Pinterest. Heard about Levi's this month too. Well, besides Levi's, the other companies that I referenced don't make any money. Stay away from IPOs. The only people that make money are the insiders. You and I at Main Street, we don't make anything on these deals, folks. Levi's, as I mentioned, came out for insiders at $17 a share. When it hit the open market, it hit the open market at $22, where we can start buying the shares. And the news headline said, plus 30%. Well, the only people that made that money, again, were insiders in Wall Street. Then there's a lockup period, folks, where they can't sell the stock for 3 to 6 months. You know darn well after 6 months they're going to. And who's going to hold the bag? We as investors. Put it on a list, look at the stock 6 months from now. Now here's your question of the week. David.
Now this one hits close to home.
Yes, it does.
Is it too late to contribute to your IRA for 2018?
Well, here's great news. It isn't, Dave. It's not too late. You can make a contribution to your IRA, folks, $5,500 for 2018 before tax filing date. You can check with your accountant to make sure that it's deductible. You can also make a contribution to your Roth IRA. Again, check with your accountant to make sure that you don't make too much money to make that contribution. Self-employed, you can make up to a 25% deduction off your bottom line. Again, saving money in your taxes, putting money away for you, and giving the IRS less. So again, it's important to consult your accountant, but it's not too late, at least up to tax filing date. Now here's your tip of the week. Be careful. Monday is April Fool's Day, and we don't like to be made look like fools, do we, David?
We do not.
Yes, I'm about to wrap it now, Dave. You see I'm going to wrap? Be careful on Monday. Thanks again for tuning in to the blog, and we'll see you next week on the Captain's Blog.